We're going to go first is the deep south of the city. Now, this is right around where Stony Trail cuts across the city in the south, sort of a little north of that and a little south of that. So these types of communities, half of them are brand new. You've got Legacy and Walden and Belmont and Seton and Rangeview. All these communities are brand new south of Stony Trail. And we're going to zero in. First of all, let's look at the numbers north or at the top for the city of Calgary. So last year to date, we've had just over 18,000 sales. Year over year, that's down 16%. Days on market are just over a month. And the average price right now in Calgary is $629,000, $610,000. That is a 4.1% increase over year to date last year. Now, this is the average price. When you start to see in the media price decreases all over the place, they're using a stat called the benchmark price. The benchmark price is, they call it an average property in an average community, and how they get to that number, I'm not exactly sure, but that's what the benchmark price is. We use the average price because we can actually calculate that using actual numbers. So we're still seeing a 4.1% increase over last year, which we said in the intro is interesting. It might go a little lower than that as 2025 comes to an end. We still got 3 months to go, so we'll see what happens there. But looking at some of these communities, what we like, probably the number one community that we like to put people in the far deep south there is, well, there's a couple of them. The first one we're going to key on is Seton. Now, why do we like Seton? Because Seton is where the brand new hospital is. All the shopping in that, the new shopping area, the new community center, which has rinks in it. There's a new Y. There's a high school down there. Everything is down there. So that's why if you're buying an investment property down there, don't go, as far as you can in Belmont or far out in Rangeview right now, because there's really nothing out there to attract tenants. But if you look at Seton, you've got people doing Airbnbs right there because it's near the hospital. Doctors will come in for a month or two to do their locums at the hospital. People come in and visit patients at the hospital for a number of days. So Airbnbs work down there. Single family rentals work down there because there's lots of employment in that employment center that the hospital is.
Yeah, the other thing with Seton that we find is the infrastructure around there. It took us a while to actually appreciate this, but once the superstore went in, the movie theaters went in, there's even a Chipotle there. You've got everything's brand new. So if someone's living down there, they love it because they don't have to come up to the city. They don't have to go anywhere. They've got everything down there. So Seton's a real winner for us. It's a walkable community. And then the other places are right around Seton, like Mahogany's right there. Mahogany, Auburn Bay, all of these suburbs are winners. Like, if you can come out of there and you're in a newer community, people want to live there, it's established. I mean, how long did it take Mahogany to be built out?
Well, they're still building. The far southeast corner is still being built to Mahogany. It's a huge community. The thing is Mahogany's got a lot of high-end homes. So that prices a lot of the homes right out of the rental market. You can't be cash flowing on a property that's $800,000, $900,000 unless it's an executive rental. But having an executive rental that far away from downtown is kind of difficult. So, but there are pockets in Mahogany that the prices are affordable. You can get a suite of property. You can get a decent townhouse. There are properties down there that will rent out, but you need to find the right property in the right location. You don't want to be backing onto the major roads. You don't want to be in one of those condos that there's a whole cluster of condos, say 6 or 7 or 8 buildings, all the same. There's nothing to differentiate your unit from someone else's because it's just a big cluster of condos. Yeah,
I know when we were renting Cheyenne's place out in Auburn Bay. So we bought Cheyenne, one of our investors, a $610,000 bungalow in Auburn Bay. It was an illegal suite. We actually went in, our team legalized it for him. That cost $10,000, so he's in for $620,000. But that property is rented all of the time. And when you read the rental description on something like that, the property is air conditioned, first of all. It's 2 bedrooms down, 2 bedrooms up. It's basically brand new. It comes with lake access, and it's walking distance to the hospital. I mean, when you factor all of these things in, the property's rented 100% of the time and it cash flows. So when you're within walking distance, once again, Tim is stressing that when you're further out in communities, and that's why we can't stand sometimes the brand new communities. And to be honest with everybody, in the beginning, we were staying away from Seaton just because we knew the infrastructure wasn't built out. But now that it's built out, and if something comes up, legal, illegal, or if we have to put a kitchen in the basement to bump up the rents so the property would cash flow, we would jump on it all day long. It wouldn't even last a day if we seen it. So those properties. Another one to mention in here is Mackenzie Town. Mackenzie Town won Community of the Year once. Mackenzie Town is like the Tuscany of the South, right? It's a lifestyle community. It's got a little town. You can I've actually been in that pub during happy hour. It's busy.
Yeah.
Like if you go there on a game day, I can't believe the locals that walk down. It's got a good feel. People want to live there and it's very easy to rent out. And what we love about Mackenzie Town, it's affordable, right? And you can get the same rents. This is what's funny. You can get the same rents in Mackenzie Town than you can get in Auburn Bay for a suited property. So you're buying in $100,000 cheaper roughly, and you can get the same rents. And you know what? There's a lot more properties that are built to suite. You can get bi-levels and bungalows that there's more.
And there's a lot of suited properties already there. So just last year, we got one of our clients, Cheyenne, suited property with tenants already in it. It was legally suited in Mackenzie Town. Tenants were already in that. It was turnkey for him. He bought the property, was collecting rent from day one. So there's a lot of those in Mackenzie Town as well.
That's his best property. He owns a bunch of properties. That's his best one in Mackenzie Town. He actually rents out the garage for $350 a week, and $350 a week is pretty standard. The upstairs, we just rented
$350 a month.
$350 a month. Sorry, I'm thinking about Australia. They go off the weekly there. I was just down there looking at my rental properties. So anyway, yeah, $350 a month on the garage, and then $2,400 up, and then $1,500 down. So the rents are amazing. He cash flows all day long in Mackenzie Town. The other communities, Legacy, Silverado, Copperfield, you just got to watch because Copperfield, it's huge.
Yeah, this is jumping on the west side of McLeod Trail, south of Stoney.
Yeah, you can be pushed out, all the way out to the ring road there. There is some good value if we're buying in there. Like we bought Sharif one in there, Tim. It was a top floor unit. We actually paid $30,000 less than the same unit that sold 3 months earlier. So he moved into the property. It wasn't a rental property. If we're buying in there, we're looking for those extreme deals where our investors are making money on the way in. So we don't worry about, his kind of plan with us is to move into it for a year, then rent it out. It's a top floor location, looking out to the courtyard, which is beautiful. And that will rent out to cover his costs. And then we'll go do it again on something else. Yeah.
And just a word of caution before we go to the next slide. On those communities like Pine Creek, Belmont, parts of Silverado, you are way down south there, and there's not a whole lot of amenities yet. There's, schools aren't built yet. There's very tiny little shopping malls built, strip malls. There's nothing really to keep people in that community, and they're building more and more and more new product the further south they go. So you're competing, with newer product once it comes online. Once that community, that whole section of the city gets built out, and there's shopping, and there's amenities, and there's schools, then it will become a good place for rental properties. It is very close to Spruce Meadows, so you get, visiting people coming in doing Airbnbs. But right now, we're just warning against it because we're seeing the existing inventory prices are falling in that. Quick story about that. One of our investors, Bill, he bought both sides of a duplex, legalized the basements in them, and he got in right at the beginning. And what he wanted to do was hold on for a year and then sell one side and turn that money and move it into something else. What happened though is the builders were building so much, the economy turned a little bit, and the prices of the new stuff started to fall, so he could not get the price that he wanted to sell his existing property. So he's got to wait a couple more years to get the price that he wants.
Yeah, and that's because the new communities, they just keep building the same product. So just keep that in mind, please.